Ontario farmers continue to spend big money on farmland, especially in the southwest part of the province. Will the trend continue in 2018? For some insight on that question and more, we're joined by Ryan Parker from Valco Consultants. Hi, Ryan. How you doing?
Good, Brian. How are you?
Hey, I'm all right. Great to have you. Thanks for joining us.
No problem.
Hey, now you've just released your 2017 Southwest Ontario Land Values Report. Tell us a little bit about Valco and the key findings in that report.
So yeah, at Valco, we're an appraisal firm, so we do real estate appraisals on all types of properties. But myself and a few other guys in the office specialize in appraising agricultural properties. So anything from basic land to livestock buildings to grain elevators, feed mills, anything agribusiness or agriculture related is what we focus on. And this study in particular, we've done since 2010 across Southwest Ontario, 11 counties, to kind of study and give people an idea of what land values are doing specifically in that area. Obviously that area plus or minus a few counties is the hotbed for agriculture in Ontario. There are a few other pockets outside of that, but that area there is where you have a lot of the dense agriculture, a lot of the dense livestock capacities in that area. So again, that's what we focus that study on.
Yeah. And hey, let's talk about some of the key findings and I guess the things that sort of reach out and grab you. I'm seeing, southwestern Ontario, in 2017, obviously up over 2016, up 9.7%, median price at $12,700, and some big prices in specific counties.
Yeah, so to start off with the year-over-year increase, which is kind of the big high-level number, definitely a bit of a surprise. The last 3 year-over-year changes were in kind of that 3 to 5 to 6% kind of thing, which is much more of a long-term type rate. If you go back to 2010 to 2013, we did have some 20 to 30% average increases there per year across the 11 counties. This year, with some, our commodity prices have continued to stay kind of low. But the biggest thing is interest rates on the move up and projected to move higher. And yet, we've got almost 10% increase in a lot of these counties. So it's kind of a big shock there. As far as the average price now, yeah, we've got an average price across 12 counties, over $12,000 a workable acre, which, if you're in counties like Perth or Oxford or Huron County, that's going to seem low to you, but we do have some counties in there, Grey and Bruce, that have some value still sub $5,000 an acre. It takes a lot of 20,000 plus to get that average up over 12. And on the 20 number there too, we have ground in, I would say, 3 to 4 of the counties, pockets in 3 or 4 of those counties that are hitting 20,000 an acre. And we have Oxford County as a county now, over $20,000 an acre median, which is pretty wild to have an entire county with that kind of price.
Hey, this is the largest increase since 2013, and many people thought the specter of higher interest rates, would dampen buying enthusiasm, but it hasn't.
No, it hasn't. I think it will probably have an effect at some point, but you got to keep in mind that any impact on interest rates is going to lag, because even the stuff that was bought in 2017 in the latter part of the year that would have been subject to higher rates, it's being bought by producers with a large block of land behind them, and a lot of that land is going to be tied up at cheaper rates long term. So, if somebody locked in a couple of years ago at 5 or 10 year rates, that they're going to be significantly lower rate than what it would have been here in 2017. So that kind of cost averaging model comes into place where they can afford to pay a little over higher rate on that 2017 purchase because they have some pre-2016 stuff that's a much lower rate. And the other thing is too, some of that is going to lag, and that we might see more of that have an impact in 2018, depending on what rates do. But definitely, it's still surprising with some of those rate increases that we haven't seen a pullback yet.
Hey, let's talk about the quota/livestock equation here. Obviously, supply management is having a big impact here. especially with the recent quota allotments, for dairy and poultry producers?
Yeah, so the livestock in general, so if we throw everybody in the livestock group, has a major impact specifically in certain counties, but especially in southwestern Ontario. So if you take counties like Oxford, Perth, Huron County, Middlesex, and then you got pockets in Bruce and Grey and a few other counties, but those three counties in particular, and Wellington as well, have some of the most dense livestock, the highest density of livestock producers in the country. And that produces a completely different climate for land values in that area. The competition there is not totally derived by cash crop farmers thinking only of yield and price. They're thinking of manure management. They're thinking of feed capabilities, right? To have enough feed for enough cows, and so that makes a whole different equation for land values than in counties like Kent and Essex, where there's very, very few livestock producers. Obviously, on a more regional base or a national base, supply management does give our supply managed farmers a bit of a leg up. They've been, you would say, more profitable than our American neighbors, and that allows them to then, get into the land market a little more. Now, that may not be as rosy on the horizon for some of them, depending on what happens with NAFTA, but for sure, the density of livestock producers in southwestern Ontario has a major impact on land values. On the quota allotment side, that is going to have a bit of an impact on land values, but is having a much bigger impact on actually farm buildings. So, I know this is kind of a subset to the study, but we're getting a major expansion in livestock buildings now in Ontario. Almost every sector is expanding, and the supply managed sector in particular is expanding because of the quota allotments that you mentioned.
So Ryan, let's look ahead to 2018. Do you expect interest rates to start to impact the price, that farmers are willing to pay for land?
Yeah, I do. I think it definitely depends on how fast rates increase in 2018 as to whether that'll have an impact or not. But continued pressure from interest rates will be probably the number one factor of changing this land value market one way or the other. It was the biggest reason for the run-up, starting in after that recession, especially in the U.S., where we had really, really low rates and projected to have low rates. That's what really got things moving upward, and I think the same thing will happen on the backside if rates start to increase. I think this land market will have some air taken out of it. However, it's going to take something fairly significant. If we only get a quarter point or a half point change in 2018, I don't know if that's going to be enough to really take a lot of people out of the market. If we get something like a full point change in 2018, then yeah, I think you're going to see the brakes been put on. But again, a lot of people think, well, rates go up, maybe there's a crash. There's no crash for quite a while, because even if rates went up a point or a point and a half or something in 2018, the first thing that would happen is people would stop buying, right? And so you'd have no sales. The next step would be the people who couldn't afford to keep it anymore would have to sell it. And at that point, which is probably a couple years down the road in reality, at that point, then you may see a drop in land values. But it would take some significant time to actually see a drop.
Right. Hey, final question for you, and that is, about NAFTA and trade policy and the potential impact on supply management. Do you think supply managed farmers will be taking a harder look at the future of their marketing system and what they're willing to pay for land?
Yeah, I think they probably will. There's definitely talk of change to supply management with NAFTA, and it's been brought up quite a bit on national media. But to me, I think if you listen to our government and our policymakers, they seem to fully stand behind supply management, which is a good thing. And I think if there's any change to supply management, I think it'll probably be a slow erosion of market access over time. I don't think there'll be any kind of knee-jerk reaction. I could be wrong on that, but I think that's likely what's going to happen. Obviously, if there was any major change, that would have a significant impact, especially in certain counties where supply managed farmers make up a high percentage of buyers. But from a supply managed perspective, as I mentioned before, we have a lot of our supply managed guys expanding now. New quota allotments is allowing them to build barns and expand, and that's a good thing. That's allowing them to get to to get to a scale that could withstand some of that slow erosion over time. So I think they're in a good spot, but obviously any change to their income is going to have a change to how much they're willing to buy for land.
Right on. Hey, Ryan, thanks for joining us. Hey, if listeners want to find out more about Valco and your land values report, where can they find you?
Yeah, so the easiest first step would be our website, so ValcoConsultants.com. If you go on there, you can get an idea of our firm and what we kind of do. As well, the study is on there that you can take a look at. People can also email me if they would like, so rparker@ValcoConsultants.com. You can email me and I'll send you a PDF of that study. We don't charge anything for the study. It's something we kind of do we started doing as a service to our clients. Our bank clients, our lawyer clients, and our farm clients. That's what we started doing it for, and we've just continued to kind of send it out to anybody who would like to read it. And it's been great for us, and I think great tool for farmers and advisors.
Awesome. Hey, it's been great to have you, sir, and thanks for taking the time. We'll chat again.
Sounds great. Thanks, Bert.